Make sure this is recording. All right, there we go. So we are now recording. Okay, so yeah, like I said, the first few things that you want to know how to do is to make sure you're able to read your support resistance zones, like identify your candles, all that kind of stuff, stuff like that. So basically, what we're going to begin with is support resistance, and we move on to trend, then candles, and then some entries here and there, because we're going to go more in details about entries and week 3, I believe. I think it's week 3. Yeah, so week 3 is going to teach you more about specifically entering on entries. But yeah, like I said, this one's going to focus more on the idea of just basic knowledge, how to like identify like certain areas. So before we start, as you can see, this is your general concept of support resistance zones. Like this is all over the internet. Like I said, it's one of the most easiest things that you can know when it comes to trading, or rather marking up a chart, or like looking at your little thingies on Robinhood, Webull, all that kind of stuff. Like I said, it's really easy to identify. So basically what you're going to do is begin with, let's just say that we had a resistance. Okay, so the most general way that I discuss this, basically resistance is the roof, like the roof on top of your head, and then your support is the ground level. So if you're jumping, you can't break the support, correct? So what that basically means is, if you look at price action in a chart, like for example, you have this little area, that is your floor, that is your support. You're gonna see how price came up and respected it, then went back up, same thing. There's your roof, price respected 2 times, came back down. Same concept, but it doesn't necessarily mean just because there's resistance or support does not mean that price won't go through. So I need you to understand that. Also, another thing you need to understand that is if price is bouncing in an area of like a lot, then price is looking forward to break it really soon. So for example, this is the prime example of how price is like rejecting the area quite a lot, because the best way I explain this is, if you keep hitting the wall gets weaker. That's just a prime example of how I demonstrate it. So I'm trying to break it down to like the most simplest concept that I can. So the more that you why does people, okay, I gotta keep admitting. So the more that you hit something, or the more you step on something, the more you, I don't know, let's say if a hammer, you keep hitting something, you know what I'm saying? So it'll get weaker. So just because you see price respecting the zone a lot, like I'm sorry, respecting the resistance or support a lot, does not necessarily mean it's a strong zone. Like all that tells me basically is that it's bound to get weaker in the future. So we'll see how that goes. But yeah, that's your prime example of support and resistance. But support and resistance not only go one way, it can also be used as a trend line. Like I said, it just depends on how you use it. There's a variety of ways. One of the most simplest ways is right here, like I told you. A strong support zone rejected a lot of times, that it came back up, and it just broke right through. Then reacted, the resistance came back up. So like I said, you keep hitting something, it gets weaker, and that's something to even work on. So that is something we're gonna work on doing. And then of course next you have trend lines and all that kind of stuff, which will I believe this is more, it's really just identifying trend. Okay, so if you see price, this is also another form of using support and resistance. Okay, so basically what I mean by that is, like, if price keeps going up and rejecting off a trend line, right, up and down, then basically you have your form of trend, or rather your form of support or resistance, you know what I'm saying? So like a good example is that this would be your resistance formation of trend, and then I believe that other one would have been your support formation of trend. Okay, so these are one of the most 2 simplest way of how to identify your trend in the market. Okay, so like, how do you identify price? How you identify where price is going? It's the most simplest way you can use. That's not how I trade though, but it's something that you got to know. You got to be able to see on the chart. Okay, so if you got to identify it, then you're good to go. Well, that's like I said, that's one of the most things you want to focus on. So as long as you do that, then you're good to go. Or rather, I want you to be able to do that particular thing. So let me verify one more thing. Y'all can see all of these stocks, correct? Yes or no? I just need like one person to type it in. So I can just make sure that we are okay. Good, great. So we're gonna do something from scratch, and I think we're gonna take a look at. Let's take a look at. Let's take a look at this pair. All right. So, all right. Let me open this up in another. Wait. 5. Where's the other ones? Okay. Let me close my trading view on my phone and my iPad real quickly, because I don't know why it's making me. Hold on, give me a second. Let me just close the apps real quick. Okay. Okay, so now let me try to open back up. Alrighty. Don't know what's going on, so we're gonna take a look at something else. But I mean, I can break it down. Just I want to erase this particular markup, but we'll just begin with something else, which will be, I don't know. Let's take a look at. Okay. Okay, we can look here. So, is there a name for different support resistance, such as like diagonal, horizontal? I don't know. You know, like me personally, I just simply call it support, resistance, and trend lines. That's all. Like I'm not gonna complicate it. I'm not gonna add in all the additional thing. Like I said, when you are learning how to chart, ignore all the unnecessary terminology that you don't really need. Like you don't need to waste your time learning a bunch of like things that are out there. Okay, so if I were you, just understand all you really need to know is support and resistance, candlestick patterns. I don't use those, you know, all that kind of stuff, but I'm just trying to give you the general idea of what I'm discussing. Okay, so yeah. So what I'm saying basically is what we're gonna go ahead and do is identify support resistance and how do we find them, which one are valid, and all that kind of stuff. So first thing first, when you are looking at a chart, what I'm going to tell you is when you're looking at a chart, there's no need to mark up every single zone that you see. Okay, so one thing I don't like when I see people's charts or beginners charts or just like charts in general is that I'll see a bunch of horizontal lines. In other words, like people are just like highlighting every single zone that they see. Like they're doing this, they're doing that, they're doing this, you know, they're doing like there's another zone right there, another one right there. Like there's no need for all of that. Okay. So what I'm going to tell you is basically all you need to understand is that your most important zone is your recent price action. And what does that necessarily mean? Is basically anything within projections of around maybe 6 months, maybe. So like there's not even 6 months, just this particular zone is your most important zone that you got to understand. Okay. So oops, let me delete that. So anything past that zone doesn't necessarily matter. I'm not saying it doesn't matter, it's just that you need to understand that this is where your current price action will tell you what's going on. Okay. So what I mean by price action, the candlesticks. And with that being said, basically, if you can identify your current price action, you can locate where price is going a particular day, that's week or that month. Okay, because if you're looking at price action all the way from here, it's not going to tell you anything. Okay, but yes, you can take previous price actions, such as this one that's all the way back there, to identify your zones. So if I go all the way up there, or even just down there, you can see why price relatively rejected, which is so if I just stretch it across the map or across the screen, you're going to see how price rejected out that area. So here, this would be your, let me click the highlighter. Here, this would be your like your support right there. That would be your resistance, resistance, and then price acted out as a support. So when you refresh the screen, you can see how price came directly to this location and then shot back up. In week 3, or I think week 2. So next week, I'm going to teach you about market structure, which is basically why this would have been a buying zone for Cron, which is, I don't know what Cron is. I don't really pay attention. I don't look at news. I don't know what Cron is. But what I'm going to tell you is next week I'm going to teach you how to identify market structure. So basically to help you like identifying why I can is it echoing? I have no idea. I mean, it's probably I don't really know necessarily, but yeah. Sorry about that if it is. I'm gonna make sure I mute everyone though. Okay, there we go. Mute all. Okay, there we go. So yeah. Okay, there we go. Great. So basically, yeah, next week I will teach you how to identify your market structure. So once you can identify market structure, you can ask yourself, oh, price, why is this a good area to buy? Why can I buy at this resistance or this support? Your most important thing in the market to me is market structure. So if you can identify market structure, you're good to go. If you cannot identify market structure, to me, your support and resistance zones do not matter. They can work, they will help in terms of maybe pullbacks or stuff like that. But what you really want to learn how to do is identify your support and resistance zones, and then you should be good to go. So yeah. So like I was saying, yeah, so using price action from the past, this will be your most general way of identifying where price could go, okay? So it's the most simplest way. Like, of course, like I said, but there's a variety of ways you can look at, but this was the daily time frame, okay? So this is basically looking at as the higher aspect of a long-term aspect, okay? So long-term wise, of course, your target will be like 15, this liquidity sitting up there, which we will learn in week 3. Yeah, so that'll be like week 3 of March or so. So what we have here is that we can also see, or rather also identify. Yes, let's avoid talk about structure, okay? So basically what I'm basically implying is that this particular zone from the past is what you need to look at, but that's looking at the higher temperature, the daily. So, so one thing I need you to understand is that, let's just cut down the volume. I don't know how to cut down the volume. It's just the speaker. Hold on. So before I get back to what I'm teaching, am I clear to everyone? Because some people say I'm echoing, some people said I'm loud, some people said this or that. Stefan, so basically you want me to decrease, okay, I'm clear, okay, I'm fine, okay.
I wasn't talking about you, I was talking about Natalie. Maybe she should cut her volume down a little bit because she's saying it's echoing. That's who I was talking about. You're fine.
Yeah, let me see if I can just, let's see if I can edit something here really quickly. All right, give me a second. Let's see. Let's see. Okay. I'm gonna try moving my laptop because my laptop is the one that's taking the sound. I'm looking at a different monitor here. Does it sound better for y'all? For some of y'all, whoever's on necessarily, asking about it, does that sound more clear or more better? Yeah, no, better. Okay, I guess that's fine. Okay, good. So yeah, so what I'm saying basically is that so you want to understand that you can identify your time frames. What are time frames? Are these particular candles up here? So where is my little toolbar? Let me say, make sure it's sharing screen. Okay, so this is my little toolbar up here. Okay, so you want to make sure you can identify your time frames. So you're gonna have the daily, you're gonna have the weekly, you're gonna have the monthly, because this is if you don't have the pro, you're only gonna have the monthly, the daily, the weekly, the 4 hour, the 2 hour, the 1 hour. I think you're gonna have the 45-minute time frame, the 15, and the 5 and the 1. So okay. Let me break this down one more time. What we are teaching today, since people kept telling me, well, I teach this, well, I teach it. What we are going to break down today is strictly the basics of marking up. After I'm done with that, then I will teach how I'll mark it up in terms of basic knowledge. Week 4, we're going to break it down from everything that I know in my head and how I mark up a chart, how I look at a chart. That's going to be week 4. So if you are more of a, I got to click on it all. If you're more of someone who's like, who's new, this is good for you. If you're experienced in charting or whatever, then this is probably your little wayside. You don't really need to be here, any of that kind of stuff. That's fine. But yeah, I will teach how I look at my chart myself. I'm just demonstrating the basics for people who are new. You know what I'm saying? So yeah. Yeah, so basically, as I'm saying, the 4 hour, the weekly, all that kind of stuff is like something you need to look at. Okay, so if you start at the monthly time frame, I barely ever look at it, but that's usually when I look to identify trend. As you can see, prices going up, so trend is actually going down. I'm sorry. As you can see, this was January, okay, and then this was February, this was January, and then this is each candle represents a month. So if you go to the weekly or the 2 week, let's go to the weekly. Each candle represents a week. So in terms of price action, if you were to use just regular eyes, you can see the trend is up. Okay, but we're gonna stick to the daily and the 4 hour. So if we take a look at the 4 hour, okay, we can already see that these are our zones. So remember I told you, you don't want to add a lot of zones, but you want to make sure it's relatively logical. So if I add all this in, you can see why price jumped and rejected. Okay, so just the simple concept of using support and resistance zones. So price came up here, and remember I told you, the more price breaks through, the more price hits. You want me to zoom out? Yeah, so technically this area right here does not matter to me, okay? Because you can see how it becomes really uneven. Like I told you, your most important area will be your current price action. And which is your most current price action is basically anything in between this area. So all of that, I'm not saying does not matter. It's just that if you put too much thinking into it, if you put too much if you overthink, you'll mess up. If you definitely if you overthink it, you're going to mess up. So I don't want you to overthink. I just want to keep it as simple as possible. So if you see rejection zone or we see price rejected somewhere quite a lot, mark up the zone. Like, don't go so much further past to say, oh, what happened in the past, what happened here, what happened there. Just mark it up, move on with your day, okay, and then continue moving on with the chart. So don't keep it don't try to overdo it. All that kind of stuff is not necessary. So yeah, yeah. So for this particular aspect, as we can see here, is that was our like I said, what you wanted to do was when price starts to reject something a lot, like right there, you see how it keeps rejecting. What does that mean? Price is trying to break through. So what did it do? Eventually, like a couple of months later, price came up, rejected directly up. Okay, so does it work the same way for support? Yes, and okay, yes and no. But the thing is, there are a variety of ways how you identify noticing whether or not price will break through or not. Okay, so when I'm looking at this particular area right here, right? So you can see how price is just slightly struggling to get down there, which means that it has no intention of going lower. Because if you looked at this and price rejected, because if you saw a lot of these, price would break through their support. Okay, but this, I'm going to speak a little bit about market structure, because without market structure, it's kind of hard to identify why price broke with support or resistance. But what I'm going to tell you here is that this was a logical low. Okay, so you don't want to break this low. If you break this low, it officially becomes bearish and all that kind of stuff. So so it officially becomes bearish and all that kind of stuff. So you do not want to go any lower than this in order to keep it bullish. So but we will speak about that in week 2. I'm currently recording this for anyone who needs it, so don't worry about that. Yeah, so anyways, like I'm saying, you can see how price is not really trying to break through the support. Like, it only hits it 2 times, okay, just 2 times, compared to this 1, 2, 3, 4, 5, 6, 7, 8 times. Okay, it hit this resistance 8 times. All right, so that's, like I said, punch a wall 8 times, the wall gets weaker as composed to the wall, the ground being hit 2 times. Okay, 1, 2, or rather, this is the 3rd one, but I started it from there, which I would say 1 and 2. All right, so that's why. But yeah, that concept is that concept. So like I said, basically you could use the same format all throughout the maps, all throughout the chart. But sometimes, but like I told you, every support and resistance does not matter. Okay, and what makes the support and resistance valid is is it has to touch at least 2 times to make it a valid support. Same thing goes with trend. So if it hits a trend 2 times, it is valid. If it's 3 times, it is valid, 4, valid, so on. But if it only rejects 1 time, so what I'm talking about is a price only, let's say we did not have any of this right here, okay? So if we didn't have any of this, this is not a valid support, resistance, okay? And why is that a good example is that if you just saw a rejection occur 1 time and then you applied this particular resistance, here's what happened. Basically what's gonna happen is that you try to sell or whatever, even though it did not reject twice, and then price would just break right through, okay? So that's why you want at least 2 rejections. Like you're gonna see the same thing here. If I zoom back out to like right there, you're gonna see how this was respected twice. And then, hold on. Yeah, so this was respected twice, which is why price rejected. So 1, 2, or rather 1, 2, 3. Okay, so that's why price came back down. But if you just originally did this and set only this resistance area, then price will break through, which I'm gonna zoom in really quickly. So yeah, so basically what I'm anticipating is basically that if you just had used this as your particular resistance area, meaning that you only had 1 rejection zone, then yes, you would hit stop loss or you being drawdown, whatever it is, if you're trying to sell or have it put in prompt, like whatever it is, okay? So you got to make sure you are using your eyes correctly or reading the chart correctly in order to anticipate your zones. So that's why I said having too much lines can make you contradict yourself or have the wrong lines and all that kind of stuff. So that's something you really want to avoid.
Nez, is this a 1 month chart? What did you say this was?
Wait, hold on. I want you to type your questions to me so that way, because I want to I want to get the thing flowing. So I want you to type your questions for me. Because I can see, I have 2 screens here, 3, so I can just see all your questions while I'm speaking. So yeah, just type your question to me and I'll get it for you. My bad though. But yeah, you can.
No, you're good. My bad. I'm sorry.
Yeah. Okay. So yeah, like I was saying, basically, while I'm waiting for her question, yeah, basically what I'm saying is, yeah, you make sure you are using your zones correctly and not adding in too much line. No, it's a 4-hour chart. Like the time frames are up here, so you're gonna see the 1 hour, 2 hour, 3 hour, 4 hour, like the monthly. This is the monthly right there. The monthly, there's barely anything going on, which is why I barely ever look at the monthly time frame. But that is a 4-hour chart that we're looking at right there. Yeah. So yeah. So as I'm saying, yeah. So make sure you are reading your zones correctly. Make sure that you have at least it hits the zone twice. If it's just once, you're just playing a risky game. But another thing I want to teach y'all is we're also gonna. Did I say fibs entry? Let me just check the announcements. Okay. I'll probably taught fibs like twice or 3 times already, but I'm gonna make sure I teach it again here. So it says people why 4 hours, not a couple of days a week. Okay. Let's answer these questions. All right. There is no best time frame to use. That's for Natalie. Okay. There is no best time frame. It depends on your method. So if you're going to use support or resistance, your best bet is 4 hours in your daily time frame. Like anything above 4 hours, your best bet. Okay. If you're going to use trend lines daily, 4 hour, 1 hour, 2 hour. If you're going to use for Jaleesa, why is 4 hours and not a couple of days a week? I'll tell you this aspect. Let's say that I don't know a good example to use, but what I'm going to tell you is you want a wide spread of information to look at. Okay, so if you go to the monthly time frame, right? I'm going to go ahead and cancel this. What are you going to do with this information? Nothing, because there is no price action to really work off on this. Okay, so the thing is, if you go to the monthly time frame, each candle is based off every single month. So what does that mean is that nothing's happening in this chart except for every single month. So basically, you're just staring at nothing. All right. That's why you want to use the 4 hour, which is like every single 4 hours, because there's a lot of candles there, all that kind of stuff. So that's what time frames tell you. But you need to understand how to confluence your time frames, because if you do, then you're gonna be able to read like going between the 1 hour to 2 hour to 3 hour to 4 hour. And I think that comes from time. Like I can Oh, that's not bad. Yeah, so I can teach timeframes. I'm sorry. I think that's week 2, or that's week 4. I don't know. I think it's week 2. But basically, timeframe confluences are basically how you identify looking at your chart from different timeframes. So, like I said, it can get a little complicated. But when you first start, I strongly advise you the 1 hour, the 2 hour, the 3 hour, the 4 hour, because they're just the most general things you can look at. Specifically, the 4 hour. But if you're looking at stuff like, I think if you're looking at, let's just say a brand new stock just came out. I think maybe this one. Nah. No, I don't remember which one it is. Okay, let's just take a look at this one real quickly. So this one came out. That's incorrect. I don't know which one I'm trying to look at. I just forgot which one it is, but if I can find it later, then whatever. But as of right now, if you look at a brand new stock, it says what? So basically, it's possible to combine data from different time frames for correct. Yes, it'll be available later, and for a limited, basically. So basically, yes. You just combine every time frame to get your own analysis, right? So if you and I were basically looking at these charts or basically looking at the time frames in general, you'd ask yourself, what is he seeing from the 1 hour? What am I seeing from the 4 hour? I'm sorry, what am I seeing from the 4 hour and the 1 hour? And what did I do to put it together? Okay, because you might say on the 4 hour I'm bullish, right? But on the 1 hour it's bearish. Okay, so what I mean by that is basically if you go to the weekly, okay, if you go to the weekly, this is bullish indefinitely. Okay, this is bullish, right? You see that long, it's going up, all right? But if you look at the 4 hour, current price action is bearish. So when someone tells you, oh, I think it's bearish, and if someone tells you, oh, I think it's bullish, it really depends on what time frame you're looking at. Okay, so some people can be looking at the higher time frames, some people look at the lower time frames, but then some people suck at combining the all this kind of stuff. So yeah, every single time frame gives you different info. It just always depends on how it's being used and what it's being used for, all that kind of stuff. So yeah, like I said, basically you just need to make sure that you understand why you're using it and what you're using it for. But time frames can get a little confusing, but as you continue to use it, it gets easier. I keep forgetting to submit people in. Yeah, so it gets a little easier. So basically, let's see this. So yeah, so let's continue on with using it says 4 hour winner. For A23, I don't know what you mean. I don't look at time frames like that. I use it for market structure. That's all. I don't, like I said, I definitely trade differently than the majority of y'all. So any tips you get that don't come from me, that's up to you. You know what I'm saying? Like we're all gonna trade differently. So, like I said, it depends on you. So now we are gonna discuss trend lines. All right. So like I said, I think this is the most simplest ways to understand the market, how to identify trend. And like I told you, trend tells you it's going up or down. All right. It says where exactly are you looking at? Is this a website? This is an app. It's a website. It's called tradingview.com. You can just get on your desktop or whatever, and you can literally go to www.com/ it's going to take you to tradingview.com, and you're going to make an account. And when you make an account, it's going to give you can chart for free. I have the pro because I need every single time frame. So yeah, A23, yeah, that's correct. Yeah, my bad. Yeah, that's correct though. Yeah, this is tradingview.com. This is not a Robinhood. I mean, every broker does have their little charts, but I don't like using brokers and because they lack the tools that I need, because I use a variety of tools, not just the little support resistant lines or like I use a variety of things, So anyways, trend lines. So yeah, like I said, trend lines tell you if it's basically bearish or bullish. Okay, so when I say the market is bearish right now, it's not because it's selling right now. It's because overall price has been decreasing, or rather sticking to the trend and all that kind of stuff, right? So basically, if you can identify how to look at trend, you're good to go in terms of anticipating the market direction. I don't use trend lines to anticipate my market direction. I use market structure. And like I said, market structure is your biggest key factor here. So if you learn how to look at market structure, I promise you, whether or not you can trade like me or not, you'll be able to anticipate where market direction is going, which is what we're learning week 2. It's gonna be something. It's gonna be really something that you really want to learn. I would advise that if you are here, then you're there for week 2. What if a trend has higher lows but not higher highs? If it has higher lows but not higher highs, higher lows. Are you basically saying those yellow lines are zones that are support or resistance? So basically, okay, hold on. Let's okay. Support and resistance. Higher lows, not past the resistance. Yes, that is consolidation. Yes, it is. But give me a second. Let me go back to this picture. For Natalie, that's what those yellow lines are. So on my chart, these yellow lines are indicating either support or resistance. All right. So when you go here, that's exactly what we're looking at. Does that make sense in terms of when we're going to go over entry? Right now we're discussing trend. I will show you how to honestly, I'd rather show you week 3 how to do entries, because I don't enter on so if you don't do it on the top, what do you mean? What do you mean by if you don't do it on the top? What does that mean? Are you saying like when price breaks through, then comes back and reject? Okay, let's twist it over again. When we are discussing support and resistance, okay, do you see how price broke through this support, then came back and acted as resistance? So this is your resistance. This whole entire line is a resistance. Okay, price broke through the resistance. It comes back down and acts as a support. All right, and then the reason this is still valid is because it's already reacted as a support. As a resistance in the past, which is right there. So we see price respecting, comes down, respects the support, breaks through the resistance, it comes back down and respects the support 2 times, 1, 2. So it's a valid support. And then price respected this previous price action from these 2 support resistance area, and then came right back down, respected those previous support, and then jumped through, because that's already 1, 2, 3, 4. Remember, I told you the more you hit a wall, the weaker it gets. So price broke through. Now it's come back down to retest this area. I think this is technically the first retest, or rather it's the 1, 2. So price is going up. We might see price come here, respect this again to take off that high. That's just a way to look at it overall. But that's just me, like going more faster than usual. But that's just like how I look at my zones. But yeah, I'm trying to make sure I break it down to baby term, so if you still don't understand what I'm talking about, you just let me know in the chat so I can go over that. But discussing trend lines, yeah, so when we are discussing trend lines, they help you identify trend. They are relatively really easy, so we are going to go ahead and look at that. One thing I'm going to teach you is the STAR method. So it's just something I made up, okay? I just call it the STAR method, all right? And basically what I mean by that is basically if you are using the STAR method, or rather you just drawing a star, and what I mean by that basically is all you got to do is do this, okay? It's really simple. So it's like drawing a trend like that, okay? So right there, right there. So basically you're going to draw it all over the map, or all over the chart, and then you're going to see exactly what I mean by all these rejection zones, okay? So when you are marking up a chart and you see like all of this, so if you apply that star into, so if you apply Bob and Andreas, we will go over entries and stop loss later down the call, like I mentioned. So I'll get to that. I think we're going to discuss entries right after this, after support resistance. Anyway, so the STAR method. So this is for trend. I'm sorry, for trend lines. Okay, so if you can identify your trend lines or your star, you're gonna be good to go. So let me go ahead and help you out with so let's go ahead and erase everything on this chart. All right, so using the star, or rather using trend lines. Okay, let's keep it really simple right now. You're gonna take your lowest point. You're going to find your lowest point in the chart. All right, and then when you do that, you're gonna shoot it across the map. And what I mean by that is that you want to take it to your next low, or your next lower low, or lower high, whichever it is, whichever market direction you're going. So we're going to look at this low, and we're going to shoot it across the map. What happens when I do that? Oops, rejection, rejection, rejection. Okay, so your first rejection occurred right there, all right? So if you saw this on November 4th, and then you saw this on December 20th, and then you draw this line, even if I took out all of this, this line still remains there. So you can either tell yourself, I want to wait for price to get right there, but it won't unless it shoots down dramatically that fast. So the thing is, you got to anticipate for price to come like that, okay? So because cron appears really slow, so you want to anticipate either to break that high or for it to come down like this. So it's one or the other, all right? So those are the two things that you should anticipate, all right? So that's just one of the methods using trend, but we're gonna go ahead and go over that. So yeah, like I told you, support resistance is the same example of using trend. So basically what I mean is you can see here how the first rejection, or rather the entry of a trend, okay? Then you shoot it across the map. So once you shoot it across the map, you're gonna have that second rejection. You need at least 2 rejections to make it a valid trend line, all right? And that's exactly what it did. So now what happens, that price, this little thing, break structure, which is usually what I look for. That breaker structure tells me, okay, price is indefinitely bullish, blah, 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 all that kind of stuff, you know what I'm saying? So, yeah, so price came back here and directly hit this. So for people who are asked about entries, basically, in terms of simple entries, if you were to be trading this, right, you would have your entry at the trend line, okay? Your take profit will be somewhere to the next high, which is right there, okay? Or the next recent high, depends on you, whichever you want. It really just depends on you. But let's say we're going all the way up there, okay? Your stop loss will technically be you don't want the next low. You just want it to be relatively a little bit between the gap, because price can tend to fill gaps often. But your stop loss is based off your risk, okay? So, because options is a lot different from Forex for me. So, like if I was trading this method, my stop loss would actually be under this low. But my issue here is that from $8 to $6 is a lot of money, probably 100% of whatever you're risking, you know what I'm saying? So, why wouldn't you just enter before you see a spike? I'm assuming your name is Rachel or Rach. I want you to tell me, how am I supposed to know it's going to spike up? Basically, tell me to predict the future, you know what I'm saying? Like, how am I going to know it's going to spike up? Or are you asking me, why did I not enter before that spike down? How's I going to know it's going to spike down? You know what I'm saying? I'm not going to know. That's why you wait for the market to give you a setup. So that setup will basically be here. This is where you're going to buy, or this is where you're going to buy, okay? Or if there's rejection zone back there, such as like up here maybe. So if you draw, like you're going to see these 2 rejection zones, okay? Right there. So you can sell here. So to answer your question in terms of selling, from this perspective, what we're looking at, it says you use support, low, and resistance where it blocks, if I'm not mistaken. Are you talking about like in this particular aspect of trend lines, or what I discussed earlier? That's for 823. I'm gonna get back to that question, but yeah, what I'm basically I'm saying basically is for Rachel. If your name is Rachel, not sure what it is, but if your name is Rachel, the only way you can enter this spike is that if you notice this in the previous pass. Okay, yeah, so Rachel, so basically, if you saw this zone, you can sell it here. But the thing is, we're not worried about that zone, right? We're worried about the support. I mean, this trend line. So the thing is, without this trend line, there's no way of you knowing that it was going to sell off or was going to buy. Okay. However, you can cash this buy if you, because you go back to the past, you're going to see how price kind of respected this area to a certain extent. You know, like I said, the better your eyes get, the better it is for you. So look, okay, so oops, so as you can see here, all right, you can see how we have that first rejection, second rejection, third, fourth, and then this could be where you buy in. You know, for Jaquan, what are you not understanding? That's what we gotta ask. What are you not understanding? You tell me what you're not understanding so we can go over that. But yeah, as you're typing, you know, all that, you just let me know. So yeah, so like I said, if you, or maybe you're late in the call, one or the other, you let me know what you're not understanding. So yeah, so like I'm saying, basically, if you can cash these zones, then you can cash a buy and sell for almost anywhere. But the thing is, you don't want to just do that, okay? So, but let's say I was anticipating a buy, then I would enter right there, okay? But let's try to stick with the structure that we have today, which is trends and support and resistance. I might cashing myself up. So yeah, like I'm saying, trend. So for trend, okay, basically what I'm basically saying is that if you are waiting for the market, because you always need to wait for the market to come to you, because if you're just entering and rushing trades, you're more prone to losing. But it also depends on your strategy, okay? So if your strategy focuses on you just randomly entering the market, whatever. Like me, I teach my traders and GenesisFX to wait. We all wait in the market. Everything's designed on waiting, being patient, all that kind of stuff, like waiting for our zones. If we miss it, whatever. You know, I'd rather miss than lose, okay? So when I say miss, means like not getting my entry, okay? So either way. So like I'm saying, basically, so yeah, so it hits this trend line. So respects to 1, 2, and the price comes down here. Like it didn't directly hit perfectly. Well, no, it did. So it hit perfectly, then it shot back up, you know, went from $8 all the way to $9, it's up like $1 or whatever. So that's how you would technically use the support and resistance method. Okay. That's just one way. I'm sorry, the trend method. That's just one way of looking at it. But if we're gonna look at the bearish aspect, you can take a look at looking in like this. So basically, I'm going to also apply the star method right now and show you what I'm basically demonstrating is that if you take this and go like that, you can start seeing how price will start doing particular things, such as, okay, this is a perfect example. So if you use the trend line to the downside, so this rejected 4 times, like I said, the more it rejects, the weaker it gets, okay? So you saw first rejection, second rejection, third, fourth, and then price broke through, retested as a support, then shot up, okay? Then took out these highs, which is your target. So from 5 to 8, that's however much, like the $3 gain. In terms of option, that can be up to $100, you know? So yeah, but depending on your contract. So this will be your entry if you want to enter, you know what I'm saying? Yeah, the more it rejects weaker, it gets yeah, it tends to get weaker. So that's the way to, but it doesn't always work like that. There are going to be scenarios where you're going to see price just doing something like this, and oops, yeah, price might just do something like this, and where it's just going boom, boom, and it just keeps on, you know, just keeps on going in a straight line like the whole entire way, and then it just shoots down. Like there will be moments. Oh, okay, there he's in. Tell them to get back in, and then I'll let them in because yeah, I keep forgetting to check the Okay, so yeah, yeah, so there's gonna be moments where price will just keep rejecting like this, and you're never really gonna know what's gonna go bullish or bearish. And at that moment, you just wait. Okay, so when that happens, I'd rather have you just wait, because if you try to buy or sell inside of consolidation. What is consolidation? This is consolidation. Consolidation is where price just stays in one area and it's not really doing anything. So you can't necessarily buy or sell it. I mean, you can if you know what you're doing. You go to lower time frames, because when you go to the lower time frames, that's going to tell you where price is currently going for today. And like, if you're always wondering why I'm able to like anticipate or understand market direction for the current day, it's because I'm always in the lower time frames. So if you can learn how to read market structure, then when you use the lower time frames, easy. You know, it's going to be really easy. It takes time though. It takes time. It has to touch at least two times. Two confirmation, then you'll be good to go. And if it's just once, you're just playing the risky game. You're just being risky, okay? So like I said, that is one, okay? So right now, what are we gonna apply here is that we're gonna try to apply the star method. Okay, it's gonna get a little messy, but I'm gonna show you a variety of examples of using the star method. So if we just do this, all right? Okay, so remember when I told you about using the star method? You take price action from as far as you wanna go. I don't care. It could be 1998. Just take a trend line, shoot it across the map from the most lowest point or the highest point. So I took that lowest point of 2018, all right? Because it seemed like that's when it came out. Yeah, 2018, all right? And I shot it across the map, all right? So you see this 2018, and then I put the next zone on August 13, 2018, then I shot it across the map. What happens? This would be your buying location, okay? So you see how using that little trend from the past, this will be a selling location, buying location. You know what I'm saying? But volume will tell you whether or not you want to enter the trade or market structure. Well, it really just depends, but we're gonna go over that week 3, not today. We're gonna go over that week 3. So yeah, this is just using the star method. Basically, all you're gonna do is just keep shooting trend lines all over the map. But the thing is, you need to make sure you delete them because they get, like I said, too much trend line is not good for you. So if I just do this and I do this, you're gonna start seeing how there are points. You know how? Wait, no. Let's go from right there. Okay, so these two rejections, 1, 2, price comes up, rejects that, takes off. Let's take maybe these two trend lines. Okay, so do you see how you're taking all this recent price action and it's just doing something in the future? 1, 2 sells off all the way down here, takes out these lows. That's where your target is. You take that same trend line, stretch it across the map, boom, same concept. Now shooting down, broke structure, which was significant because it broke 1, 2, 3. So this could actually be bearish. We don't know just yet. But the thing is, I'm not doing a deep analysis on that. I'm just showing you, I'm just demonstrating. All right. So it says you went from a low to high. What do you mean? No, lows, highs, that cut don't matter. This does not matter. When you're using this star thing, it does not matter at all. What I'm basically just saying is you need to understand that all you need to do is you need to understand how to shoot these stuff from really far away. Okay. In terms of using the star method, I don't care where your low is. I don't care where your high is. That does not matter. All you got to do is just shoot it across the map. All right. So when you shoot it across the map, you're good to go. So what I'm basically trying to show you here is that it's going to show you a variety of rejection zones, support, resistance, all that kind of stuff. Okay. So like I said, yeah. So 1, 2 across the map, 1, 2 across the map, 1, 2 across the map. Okay. Like I said, I learned last night the volume indicators. I thought was only red. It means that people were selling green. Remember I told you, different traders, different knowledge. Like what I'm basically for branding, what I'm basically trying to tell you is it depends on who you learn from. Like that's not how I look at volume whatsoever. Volume just shows me selling pressure, buying pressure in terms of entering. Depends on who you learn from. If you're learning from someone on YouTube, then you do that. If you're learning from somebody from some course, I don't know. What I'm telling you is when I teach you volume, it's based off on using pressure. Okay. But if I'm teaching, if you're going from some guy on YouTube, you might say that is for activity. I don't know. Like, I don't learn charting from if I were you, do not learn how to chart from somebody who just does stocks. If I were you, learn how to chart from somebody who does Forex, okay? That is your best bet in terms of learning how to chart. Stock guys just use, I don't know, a bunch of indicators. I don't use indicators at all, okay? They use a bunch of, I don't know, don't know, you know. I'm not saying they're terrible. They're not bad. It's just don't learn from them, okay? Just don't learn from them. For rocking, where you're struggling up, you know, what are you not understanding? For Ben, it says one time support is another. Yeah, when give me a second. For Ben, are you asking me like one support can be a resistance? Because support and resistance can be each other. So basically what I'm saying is if you see this, okay, so brush. So you can see this can be a resistance, okay? Support, resistance, support, and then now this is your new resistance, okay? And then this is your support. I'm sorry, this is your resistance support, and then this is your new support again, okay? So what I'm basically implying is, is that your support and resistance are all the same thing. It just depends on when. Give me a second, Monica. I'm going to tell you where, and then this is for, who's this for again? I can't remember. I think it's for Ben. It says so we need the line drawn, like where they cross. Okay, so when you got this line drawn, what can you do to tell me? Open your mic. Get on the mic. I don't know what you're asking. I don't know what you're asking at all. Like, I need to get on the mic.
Yeah, so you answered my question. Like a level will be a support level sometimes and a resistance level other times. So I assume that's why it doesn't matter. But like, so yeah, basically I got you now. So like moving on, like once you've done this, what can you learn now? Like what is this information telling you where these lines are?
Let's see. It varies. It varies definitely. It just depends on, you can draw them anywhere. That's what I'm going to tell you, okay? But what I'm telling you is within time, it's going to tell you where and when. Because when I first started, I used to also be confused on where I should draw my lines and all that kind of stuff. But what I'm going to tell you is try to be logical, okay? So when I say try to be logical, I mean like don't try to draw your trend lines from 1998, or if you go look at Apple, like Apple goes all the way back to like 1996 or something, okay? If you're gonna draw your trend lines from 1996, what's the point? Like, don't waste your time doing all that. You don't need to. But what I'm saying, it can help. If you know what you're doing, it does help. Like, let's say that you can trade similar to me or almost like me or better than me. You can go that far back, okay? But what I'm saying is, if I were you, stick with recent price action. And what is recent price action is basically this area. Like, what is price doing in this recent area? Okay, that's what matters the most. So basically, if you're looking at recent price action, your most current trend lines will definitely be this area. Okay, or you can just say, you can also do this area. But the thing is, when you draw that across the map, you got to ask yourself, do you want to wait for price to get all the way to $6 when it's sitting at like what, $9? The answer is no. Okay, so either you're gonna want to sell it down there or you want to buy it up there. So the question is there another trend line or another zone that's going to show me something more recent? And I got to ask myself, okay, I think I found something, which is this line. So you're gonna basically take this low to this high and then stretch it across the map, which is gonna give you why the price rejected. So you're like, okay, it looks good. It broke structure right there, which we're not going over today. You're gonna say, okay, it seemed bearish, so maybe when price comes up there, I'm gonna add a put, and then I'm gonna sell it to maybe $6. I'm gonna sell it to maybe 5, 4. Just depends on what you're anticipating, okay? Or maybe it's to the gap, okay? Because price tends to fill the gap a lot. So what I'm basically anticipating is that price might come up to like $10. So basically up here, and then make its way there, and then go all the way up there. You know, this primary example. So does that answer your question in terms of like where to draw in like your supported resistance zones and all that kind of stuff? Does that make sense so far? You can type that part in if you're ready. Yeah, that's for Ben. Yeah, does that make sense? Yeah. Okay. Yeah. Yeah. And then yeah. Okay. I mean, you sure? Because I don't want to. I think so. I want a yes. Tell me, were you still struggling or not? Like that's what I want to know. What you're still struggling with? Like I don't want to think so. I don't want to maybe. I want a yes. So what you still struggling with? Okay. Yes. Correct. Each of those lines show me that there might be a possible chance of rejection. But the thing is, you want at least 3 confirmations, which is going to tell you whether or not that price can reverse at that area. So right now, all I'm basically doing is just demonstrating this simple concept of zones. It says the star chart is where you really lost me. Okay, so okay. You have a star. Oh, actually, let's finish with Ben. So Ben. So yeah, basically, it's all I'm basically demonstrating right now is the simple concept of support and resistance. Okay, but what I'm telling you is it's more than just support and resistance. Was going to tell you that price will reverse. So when you are looking at support and resistance, you're going to also look at volume indicators, price action, news, fundamentals. Like depending on how you trade, it's going to tell you whether or not price will reverse there. Okay, me, I use market structure. That's how I anticipate whether or not that that's how I anticipate whether or not price is going a certain way, and you know all that kind of stuff. So so that's why. But does that make sense? How long do you usually watch your? Okay, so as for Ben, does that make sense for you so far? And for Barry, for the star method, all I'm basically saying is to break it down to really simple terms. You just take a trend line and you're shooting it. You're shooting it all across the map, okay? And what I mean by that is you can take this trend line right now, all right? So we're on 15-minute time frame. If you take this low to this low, and then you take here to here, and then you take like, I don't know, down there to down there. Okay, then you take like up there to up there. Or then you take like, let's see, down there to down there. No, there's nothing down there. Or you take, let's see, what else do you take? Or you take down there to down there. Yeah, or you take like, let's see what else I can modify. Oh yes, you could take this to this. Okay, so for Brandon, no, not Brandon. For Barry, do you see how I'm just tossing out random trend lines, but they're all valid trend lines? So let's do this again. Okay. 1, 2, 3 across the map. 1, 2, 3 across the map. 1, 2 across the map. 1, 2, 5, whatever across the map. Okay. So if you draw this trend line across the map, you're gonna see how price came back, retested, sold off. Okay. Yes, I see like it can be a price, which looks like a horizontal, it could be a trend. Yeah.
So basically it's showing like if it's going to go up or down.
Correct. Yeah. Correct. And then you also have yeah, the stock moves the same angles. That's correct. Yeah, that's correct, man. Yeah, that's correct. That's correct. But for Barry, are you seeing what I'm doing with this star method? Like how I'm just, because what I mean by the stars, like, you know, stars go in every single direction, right? It has like 5 heads or feet or hands, whatever stars has like 5, right? So what I'm basically saying is, when you draw a trend line, you just freestyle, okay? Just drawing all across the map to see where can I get some possible rejections, okay? So when I say that basically is, if you take this trend line right there and you shoot it across, you're gonna see all of those rejections. You're gonna see all of these rejections, okay? Highlighter. All those are rejections, then another one right there. And then your most recent, which caused that bullish move up. Like, do you see how I'm just using the, what was I saying? Yeah, so basically, if you take trend lines and just shoot them anywhere, you can get a possible explanation of why or when price can reverse. So, but basically, so basically, like, it's just, it can get simple. It's not, but you'll see what I mean when you get on a chart and you just throw trend lines on the chart. You know what I'm saying? Like, it's not that complicated. It's just, I mean, it can be complicated, but what I'm anticipating here is that when you just throw trend lines on there, you'll see possible reject. But what I'm saying is that I don't like when people, you can do that for your own chart, but when you're demonstrating to me or showing me your chart, I don't want all that there because I'm going to be confused. I'm going to be like, what am I looking at here? Okay. But what I'm saying is that really recent price action matters. So it's basically like, this is the only trend that really matters right now. You know what I'm saying? Like that one, which is what caused that, which is what the cost to buy. Okay. And then, so this is already a weak trend line. We have 1, 2, 3, 4, 5, 6, which is why price broke through. And then we also had a break of structure. So it's bearish as of right now. But yeah. Someone asked me if I chart on the weekends to prepare for the market. No, I chart whenever. Like, when you get to a point where you can understand the market, it doesn't matter when you mark up. It's just that if you mark up earlier, you can find setups earlier. That's just all it is. Me, I don't need to mark up at a particular time to find a setup. It's just, I can see a setup after it happened, then I just find a re-entry. You know, that's all it is. But yeah. So trend lines, those are trend lines, okay. And now we have candles. I don't think I want to really go over candles. I mean, I will. It's just these do not really apply to stocks. Okay. This is more of this mainly applies to Forex. So that's why I don't really want to teach it, because I know majority of you are not going to do Forex. So like, but there are some candles which help you identify bullish or like current price actions, such as bullish or bearish, but I don't use them. You know what I'm saying? Like, I think this is something that you might have to, like, I sent the candlestick patterns into the chart teacher, but I just got to scroll up, but this is not something I use whatsoever. But what I can tell you is there's a doji up there. A doji also indicates a buy or sell. So doji is neutral. But the thing is, at the top of a chart, you can see a doji, price will sell. At the bottom of a chart, you see a doji, price will buy. You know, that's the most simplest way to put it. For Forex, you need seconds time frame. No, it depends on your method. Everything depends on your method. Like, all the questions y'all are asking me in terms of time frames, this or that, everything depends on what kind of method you're using. Like, if you're just a huge decade swinger, a doji is basically a chart pattern. I'm sorry, I can't. So, okay. So this is a doji. This one right here is a doji, okay? And basically, if you take it to the chart, you can see how we have a doji right there. That is your doji, all right? So as y'all can see here, right there, that's a doji. This would have been a hammer if it had shown that. Let's say that this, let's say that you can't see this little line. Okay, let me just make this transparent. So that way. Yeah, so let's say let's say that this you can't see. All right, so yeah, you can't see that line, right? So all you can see is this candlestick, and that's all. But above that, you see this long wick. That's a doji again. Doji also indicates the doji of the trend is going to tell you what's going on. So that's going to say if you see a bearish doji such as this one, that's bearish. This is bullish. That's a hammer, shooting star. Oh, actually, let me. This is a shooting star. I'm sorry, this is a shooting star. Like I told you, I barely use these. I think they're pretty useless. But like I said, it depends on your method. If you are a candlestick trader, then you can go based off using those kind of methods. So, like I said, it all depends on your methods, what you're going to use. I do not use candlestick patterns. I don't even look at the candlesticks. I just look at market structure, okay? Market structure and zones. But if you want to use these, you can. Then I would suggest that you go to the chart teacher place, and it's going to show you all the candlestick patterns, but I cannot necessarily, I can teach it. It's just I don't really want to because I think it's really, really useless. I'm saying like I think it's a waste of time to learn. Like I really do. Yes, I have it memorized, but it doesn't benefit me in any way. Okay. So the only thing that matters to me is an engulfed candle. Okay. I think that's the only thing you should really know. Because you're to learn my method, which we are probably going to go over starting week 3. We're going to apply everything together. Week 4 is when I'm breaking it down from core to core. But if you really want to, let me check something. If you really want to use candlestick patterns, you're going to have to, you can do that. I'm not going to be your guy to teach that, you know what I'm saying? So like, I think it's really useless. So I don't really want to even go into it, but, now we're going to finalize with putting it all together. Okay. So, the question today is how do we put it together? So everything that we learned so far, how are we going to put it together? We've been looking at Cron for too long, so let's look at something else. Maybe we're going to look at Apple. No, maybe. Yeah. So, all right. So looking at Apple, yeah, the candlestick Apple could help you. If you want to use that, then you can use that. Like I said, it's up to you. Oh, for Maryland, let's see. There's some terms and comments. It would be helpful to know how to define the basic terms such as trend lines, rejection, retest. So, yeah, I'm gonna tell you what it is right now. Personally, I don't think you need the understanding for it. Like, I think all you need to understand is that trend lines help you identify trend. Rejection zones are support and resistance. In other words, the floor and the roof. The floor and the roof, okay? And then retest basically means rejections. Zones are rejection. Zones are support and resistance. Like zones, retest, rejection are all the same thing. Even trend lines the same thing as zone. Confirmations are basically your zones, your trend line, your indicators, and all that kind of stuff. Like as you improve, you're gonna see that they technically all mean the same thing. They're all the same words. It's just like, all that kind of stuff. So and someone asked me a question and probably just said, with all this charting, are you able to get an idea what could be the next movement when the market opens? Yes, that can. That's what I do. I don't look at news. I don't read stocks. I don't read articles. I don't watch videos. I just mark up. That's all I do. I don't believe in news. News is real, yes, but I don't look into it. So anyways, yeah, so what we're going to do right now is that we are going to apply this into live trading. Not live, but back testing, okay? So with everything that we know so far is that we have zones. We have trend lines, we have candlestick patterns, which we're not using because I don't use them at all. So what we're really going to use here is trend and zones. In other words, support and resistance. Okay. So as you can see here, we are in a 15-hour time frame. This is the daily. So if you want to look to swinging, then you can yeah. So if you look at swinging, like let's say you're a swinger, long-term trader, you should look at the daily. Okay. So if you look at the daily time frame, then you can just take this trend line, and you can see that's obviously bullish. Okay. You take that trend line, you go across the map. You can see the price did come down a little, but it went back up. But there's something a little off for me that I'd rather use. Once price breaks through the trend line, I adjust it again. Okay. So what I would do here is that I would delete this trend line. I readjust it and I add it over here. Okay. Is that the correct way? We'll go to the 15-hour real quick. Nah. Yeah, so I'm gonna adjust it this way, okay? So how do I know to choose this one and this one? I don't. It's just that looks more appealing to me, okay? So no, okay, it does not. Robinhood TradingView is where you chart. Robinhood is a broker. I don't think Robinhood even has a chart. I don't know. I don't look at them. I don't use brokers to market my thing. I think they don't even have enough tools. No. If you're going to mark up a chart, get tradingview.com. You know, again, I'm gonna say it again. Tradingview.com, www.tradingview.com, right there. Make an account, start marking up your charts, getting used to the thing. Like there's gonna be a lot of tools out there, you know what I'm saying? So if I were you, I'll start getting used to it. And then because if you're ever gonna start learning Forex, you're gonna have to use TradingView. Okay. So yeah, like I'm saying, start using TradingView. Because if you want to learn how to really chart, yeah, Robinhood is, no. Let's not put, I'm not saying he's wrong, but what I'm gonna tell you right now is when you go to Robinhood, this is what it's gonna look like. What are you gonna do with that? I mean, you can draw a trend line. That's it. You know, that's all you can do is draw a trend line, look at your zones. But the thing is, based off how I trade, this is extremely useless. Unless you understand, if you understand this, then you're good to go. Like I'm talking about, if you can understand Wyckoff, you can use Robinhood in order to identify your Wyckoff schematics. But what I'm telling you is, no, get on the Robinhood app. But the thing is, the issue here is that you see how there's no wicks. You're supposed to draw your trend lines and your zones based off the wicks. So if you're not able to draw these wicks, then your chart is useless. You know what I'm saying? So yeah. So basically, what is this? Okay. So yeah. So basically, to follow back on what I'm basically anticipating is that now we want to stick with how we are going to mark out. So like I said, like what I taught y'all before, nothing determines the wicks. The wicks will already be there. It will already be there when you see a chart. So if you just make sure you have candlestick patterns, you can see them. So what I'm basically saying is, when you first start looking at a chart, you want to identify your trend at the higher time frame, such as the daily, the 15-hour. I'm sorry, y'all don't have 15 hours. So the weekly, the daily, and the 4-hour. All right. So when you go to the 4-hour, we can already start seeing that we had our first rejection zone right there. Okay. This would have been our first one, but the issue here is that price already broke through. Okay. So when that happens, what you want to do is readjust your trend line. So that's why I would have deleted that one. Okay. So basically, let's say that you originally had this kind of trend line and you were trying to buy right there, but price broke through. That's fine. It's just called a fake out because some people start selling here, and that's a fake out, and that's fine. Yeah. So with that being said, you want to adjust your trend line again, and that's what you have right there. So of course your target will probably be like, I said, your target is always the highs, but I'm not saying this one is essentially our target. Your target is always the most recent high. I'm saying the latest high, which is on 137. Okay, so you're gonna target 137, all right, with using the trend line. You're also gonna see that we have some support here. So if you take like this area, or even you take this area, well, you want to take this area, okay? Transparency. So if you take this area, you can see how this is your zone. So we can see we had a support here. So if price does come here, we can see that there's a possibility price might reject somewhere around there again and cause a fake out. So we're gonna let it play out. So right now, in terms of basic support and resistance, this is all we can see in terms of base support and resistance and trend lines. Okay, there's nothing more. Okay, for what I'm teaching you today, there's nothing more to be added to this. Okay, so don't overcomplicate it. You can, I mean, you can, like I said, you can do the star method and go crazy. Okay, and say, all right, I'm going to add this. I'm going to add that. I'm going to add this and this and that. And you know, so do this, and then you can start seeing, okay, price rejected right there. So I'm going to actually add a put, and then there's a gap right there. So I'll buy again at 111. So let's say that price rejected at 121, which we saw. So let's say the market opened, but it's not remaining. Okay, guys, let's do a put on Apple. We're going to take profit at like, so let's say you sold at 121. Okay, let's say we sold right now we're in profit. All right. And then we have a gap at 111. Okay, hypothetically speaking, all right. If we let it play out, whether it sells or not, or buys, whichever it does, you know, I'm not sure which one it really does here, but our target zone will be 111. And the issue here is that, as you can see, price is struggling to go higher. So if you add this, you're going to see how price is struggling to go higher. So that is what we call your resistance. Okay. So price is kind of struggling to go higher. We are still in profit, but price is sitting at 120. I do not remember if it broke through or not. We're gonna take a guess, but right now I'm still considering. Let me check volume. Okay, buying volume is decreasing. Okay, so as of right now, I'm gonna still sell it. All right, so it's becoming diminished. So as you can see, it sold off, and then it hasn't filled the gap just yet. But me, I tend to take profits before it even hits my entry. So it depends on you. Without taking profits yet, is this 50%? Let's see, right there. I don't know, but right now we're just going to show the demonstration of teaching and all that kind of stuff. So and all that. So the volume increase. So basically, I would have been out of this trade for sure. But once you start seeing the buying volume pick up, get out of the trade. But yeah, now we want to now what we want to do is pay attention to this recent rejection, which is where it occurred right there. So as you can see, 1, 2, 3, 4, that's 5 rejections right there. So so as you can see, it broke through because it's a weakened area of support, resistance. So now we're supposed to buy here, but it didn't come down to where we wanted. But like I said, when you start understanding your volume, you're gonna start seeing how volume starting to pick up. So you might as well just enter somewhere right there, okay? And then this is your target goal. So you can take your first partials right there. Let's say you have 2 contracts. You can take your first one right there, your second one right there. All right. So basically, with that being said, now price is just free falling, and then you can find more re-entries based off using your zone. So okay, you gotta wait for price to come right there and reject again, which it did right there, and then it's gonna take off. So I can make this a little darker. So that's what it did right there. Price came back down after the support. It could fake out, it might not, who knows? But yeah, there we go. So like I said, it reacted as a support. I'm sorry, it reacted. This was a resistance. Price broke through. It came back up here, took out the highs. And it's what we call intent. So when we have intent, basically what happens here is that when price has an intent, it's basically showing that there's a possibility on the market going back up. Okay, so that's what intent means. So intent basically shows that the market still wants to go back up, but it's going to go back down to retest something, to capture stop losses, take people out of trade, fakes, sell-offs, all that kind of stuff, right? So that's what's going on right there. So that was our rejection zone. So acted as support because, this was already valid from the previous price action. So in other words, this means resistance, then you have a little support down there, okay? So this would also help you identify your support levels. So if you take you can see how I made that a support, okay? So as you get better, you can identify your supports better. So this would have been another buying location. Then you can buy again there, okay? Let me go ahead and add highlighter. So that is your buying location. So we're gonna let it play again. It took out those highs. So the contract from down there can be closed. And then now we want to say, do we want to enter again? You don't want to keep on doing that, but this is another zone. Okay. So you would have bought again right there. And then you just work your way to the 140s. And then as you can see, price went up, it created intent, which means that you can look for more buying locations somewhere lower. I don't remember if it gets in. This is intent, okay? So basically you can look to buy again. But sometimes you will be able to, like, you know, let's say, so right there, that's your intent. You can see how price comes up to capture the highs and it's going back down. So our question is, where can we sell off? I mean, where can we buy back in again? So right now we close all our contracts in profit. So let's say you want to continue riding the bulls, okay? This is looking at your recent Y1, 2. It can inversely reject to make it 2. That's fine. So one rejection off the that's one rejection. Price comes here, makes that second rejection. That's 2. Okay, that's a 2 formation. All right. So basically, that's exactly what we do here. All right. And then price falls off. It might reject it or might not. But what we can see here is that you can see that little rejection went a little bit under. This is what we call an institutional candle, which I will teach y'all week 3 or week 2. Week 3, okay. So this candle, that's where I would enter. That's where I would enter. I'm just teaching y'all based off support zone, support resistance zone, okay. But that's where I would enter again. All right. And like I said, you can keep adjusting your trend lines as you're going. So you can just say, you can take this and go like right up there, and then you're gonna start getting more entries, okay. So you just gotta as you become better at them and all that. So you're gonna start seeing the same concept, all right, taking all of these 3 trend lines, all right, and then adding them in. So basically, price is going up, and you can see how price is starting to is the buy. Okay, no, the volume is diminished, okay, but it seems like buyers are winning as of right now, okay. So I would remain in the trade until I see something differently. Selling volume is picking up for me, but we're gonna ruin. So right now we're still in profit, all right, but it's getting a little shady for me right here. So when I start seeing this, I start erasing everything. Not everything, just the things that don't really matter right now. So when I start seeing all this, we can see how price is struggling to go lower. Okay, price is struggling to go lower. Let's delete this one right here. It doesn't matter to me anymore. So now this is our new zone. So now we gotta ask ourselves, how is volume? What are the fundamentals telling me? You know, all that kind of stuff, right? So for this particular aspect, we also have, from this particular aspect, I think we also have a rising wedge here. I just can't say for sure. Just give me a second. Let me mark it up real quick. So let me delete this trend line. Fake out. Okay. So we have a rising wedge, right? Or rather, first of all, we don't know if it's a reversal or not. All I know is the selling volume is picking up indefinitely. But the thing is, I'm not gonna sell, not in a bullish market. Okay. So, but as of right now, I'm still in a buy. Okay. My stop loss at 20%, all that kind of stuff. So the more you re-enter again and again and again, then the more riskier it gets, because entering again and again and again can just become, you just increase your chance of losing. So that's why you got to take it easy. But so we already had 1, 2. So this one took the first partial right there. The second one took this next partial all the way up there. So right now, if you're risking correctly, you can lose maybe 50, 100, while you're already getting like 400, 500. So if you're playing it correctly, then good. Right now, I think I would stay in the buy, but let me go to the lower time frames. So from what I'm seeing here in the lower time frames, like I said, time frames tell you everything you got to know. So you know, like I'm saying, so basically what I'm just trying to verify is, what I'm basically trying to verify is that this came down, price not gonna come under here. Price price broke structure. So as long as price does not break this low for me, I think I'm still going to stay in the trade. Okay. So you got to play smart. So let's pay attention to price here. So if price does not come under there, I'm staying in trade. So as you see, I went to the lower time frames to see where price will hold on, and it did. It did not come any lower. So as you can see, that's why I held. So when you learn how to identify your market structure, because this is what I'm teaching you next week. Like I said, this is your biggest key thing. Okay, so when you learn how to do this, kiss to the cheek, all that kind of stuff. You know what I'm saying? It becomes like all that kind of stuff. You know, stuff like that. So basically, this is your biggest key aspect. This is your most recent price action of structure. It took out these highs. All right, this structure was important because it broke that low. All right, so as you can see, price took it out, break of structure. But yeah, that would be week 2. All right. So with that being said, you know, we got that. Yeah, so as you can see, your next target is going to be, you know, 138. So you entered somewhere up there or somewhere over there, whichever it was, 127. Now you're up over, if you got into money, you're definitely up over $1,000 right now. You've got out of the money, you could maybe be up like $200, maybe, we'll see. So yeah, this is your take profit. You know, let's keep letting it play out. Of course, you can find more re-entries on the way down, but there you go. We broke structure. I'm sorry, we broke price. So just like that, like we all up, you hit your take profit again, and then you repeat the process. Okay, so now this is your new form of buyers. Okay, so as you see here, intent again, price is rejecting. So the question is, where can we buy? So when this happens, get rid of all these trend lines. It's just noise now. You want to refresh your chart. You can keep the zones, like all that stuff doesn't matter. You can keep the zones here. But yeah, so now my question is, where can I buy again? All right, so what we can see here is that we have some gaps, we have some candles, we have break of structure, all that kind of stuff, right? So the question is, there's not really much going on in 4 hours, so go to the 1 hour. So what's the 1 hour telling me? What the 1 hour shows me here is that we have a zone right there, okay? As y'all can see, price is jumping around a lot in this area. So that means, can price come to 132? Maybe. Or can it come up here? Maybe. So we're gonna see, all right? So right now, we're looking for buys, so we're not in the trade, okay? So we wanna wait for a pullback. Or you can take out a fibs, all right? I didn't teach fibs today, but I'll teach you next week. You take from the low to the high, but you gotta wait for a rejection to occur, okay? So when that rejection occurs, then you can pull out that fib. Jesus Lord. Okay, I'm gonna need you. So this is where, because I know Apple's bearish right now, so I'm gonna tell you how I made it bearish, okay? How I identify as bearish, okay? So in a second. The buying location was actually right there, which I'm not gonna explain right now, but I'm trying to show you how I identify as bearish, okay? So right now, remember I told you, you are waiting for this buying location or one of these two areas, okay? So, but then we're gonna show you how we identify for it to become a low. So in terms of market structure ability, or, you know, understanding market structure, this is the low. You don't want to go if it goes under 131.70, bearish indefinitely. Okay, so this was the structure. This was the low, the last rejection zone that occurred in price action. In what situation do you ignore 20% loss? You don't ignore it. My thing is, unless you really know what you're doing, you can ignore your stop loss. I don't use stop losses, you know what I'm saying? So if you can, if you understand like what you're doing and all that kind of stuff, then you don't need stop losses. But if you're a new trader or you're taking signals, use your stop loss, do whatever, you know, but yeah, but that's that. So market structure aspect, this is the place you want to see it. So we're gonna let price play out. We're gonna see what it does. I'm probably gonna like the 2 hour maybe, you know. So right now we're not in the trade line. We're just waiting. We're just watching Apple to see what Apple does. Okay. So there you go. There you go. Remember what I told you. Big sell off. First of all, this is what we call momentum. Okay. So momentum basically means that if there's too much selling pressure, don't waste your time buying. Because if you buy, you're taking a gamble. Why would you want to sell in a market that's dripping like this? Okay. So you want to look to, if you see a big sell off like this, you got to wait for price to do this, like maybe come up a little and consolidate, then you're going to enter somewhere around there. All right. But if you enter right there, you're taking a gamble, you know what I'm saying? So let's watch it play. Look at the volume down there, too much, you know what I'm saying? It's indefinitely bearish. So what I'm going to be looking at is where can I sell? All right. So where can I sell? That's my question. I want to sell now because it broke that structure, body candle, all that kind of stuff. So my question is, do we sell up here or do we sell up there? You know, so I look at the rectangle, I look at all that kind of stuff, you know what I'm saying? So let's get this out of the way real quick for you. All right, we get this out of the way. What time is it? 32, yeah. Who's this? Okay, so my bad, I got a group project, I got 2, that's why. Yeah, so what I'm saying basically is, with that being said, we want to sell it either, because this already occurred. All right, we can already see how price rejected up and sold off. All right. So basically what we're anticipating is that we want price to come up to at least 136. All right. Momentum is picking up. I mean, if you're a retail trader, you're probably gonna buy here and think it's gonna go back up. Good luck to y'all. Good luck to them. Okay. So let's see what price does. If it comes up or it doesn't. This is rejection zone. This is also rejection zone. Like I said, the better your eyes are, because I noticed one right there, but I can also see how buying volume depreciated. So it might just start selling. It might not even come up there. Like it might just start selling from here. So what I'm going to do here is what I would basically do is when I see something like this, I would enter right there. That's what we did for Visa. Okay, this is what we did for Visa. This is just a prime example. So that's why I would enter right there. I would enter again right there. Okay, so right now, first position is just in profit, but as you can see, the second one initially hit that zone that we wanted. So it's in profit too. Well, assume you entered there or whatever. But yeah, right now it's making what we call a bearish flag, you know. So this is another chart pattern which I've set in the chart teacher plays and all that kind of stuff. So yeah, right there. So we're gonna let it play out. Volume still looking low for the buys. Our first breakout occurred was a fake out, but you know, it's still respecting this zone tremendously until we see something differently. All right, so still respecting the zone, doing all that. Then now it finally broke that final structure, which is what I wanted. Okay, that's the structure we wanted because it took it that high. All right, so that's it. Right now it's bearish. It's bearish from right there. We just got to let it play out and it'll make it go a little faster. You know, so as you can see, we have 2 positions. We're letting it sell off, letting it sell off. Same old. There we go. All right, just like that. We hit 118. We might go a little lower. What is my next target? I think my next target is going to be 112. So yeah, you can re-enter again at 132. You can re-enter again at, no, you can re-enter at 127. 127 is good using sponsor candles, you know what I'm saying? So that's using sponsor candles, all that. But yeah, with that being said, yeah, that would be another smart money entry. Okay. In other words, we call this some sponsor candles, order block candles. Let's make that pink. So that'll be your self entry again. So right now you're swinging 3 positions. All right. This is your first entry, or somewhere in here is your entry. All right. And that's probably your third entry, or using just your simple rejection zones, you can enter again right there. So 1, 2, 3, market opens, market comes up, respects it. You can see how there's no buying power here. Selling power is quite weak and all that kind of stuff. you enter again, you're in profit. So now you're swinging 3 positions for however much. And then, yeah, so you just let it play out, do its thing. I mean, if it comes back up, whatever, you know, but initially, this is where my first position will be. That's another rejection zone, you know. So Apple is at 121 right now, you know. So like I said, yeah, broke structure again. It's gonna stay bearish. Apple remain bearish. They said they passed the bill or whatever. That crap don't matter to me. If y'all think we're going green, good for y'all. If we think we're going bear, it don't matter. You know what I'm saying? I look at the charts and that is it. You know, I don't look at the news. I don't care about the stimulus package, all that kind of stuff. So we'll see how it plays out though. But all right, let me go ahead and read these questions. Brandon, I don't use stop losses, so I don't know. I look at the chart and if my chart shows me something different, I just exit the trade. That's all it is. I think you got it going in your entry point, but you don't really, you know, I don't use stop losses, so I can't really answer the question for you. But what I'm going to tell you is as you become a better trader, I don't know. I don't know how to answer that question. I don't really use stop losses at all. I just know that since I'm able to predict price action, since I can anticipate price action and I can see where it's going based off what I do and all that kind of stuff, then that's where I see it going, you know what I'm saying? So that is that. And then so how do you know when to buy in if it's moving like that live? Do we look at it says, do you look at what is done previously? So how do we know how to buy in? I mean, I just demonstrated how you buy or how you sell. So to answer your question, basically, I would have to do that all over again. But to break it down, use your zones and your volume, because this was happening. If this is happening live, remember each and every single of these candlesticks is 30 minutes. Okay, so you're not gonna stare at your chart that long. You know what I'm saying? Like all you gotta do is find your zones, find your market structure, and stuff like that. So when you start finding those stuff, then you should be good to go. You know, stuff like that. But yeah, what else do we got here? Let's see what else we got here. Let me see if I can find. Let me see something real quickly. Okay. Yeah, but to answer your question, what would have to happen now for you to take profit? By the way, for Julia, it's going to be done. It's going to be at the chart teacher place, depending on how big it is. So it's gonna be that's where I'm gonna put the video. That's where I'm gonna put the video. For Julia, for Vocate, to answer your question, basically what I've been explaining since the back testing is, I mean, I'm gonna post a video that way you can go back. But to answer your question for analyzers, your rejection zones, your market structure is going to tell you whether or not you want to buy or sell. And as for Bob, what would you have to happen for me to take profit? Anything. Being content, reaching my target price, reaching my take profit price. You tell me. Like I said, it depends on you, not me. It depends on you. Like me, if I say I'm content, I don't care about the trade no more, I close. You know what I'm saying? Like for Visa, mine was more of a quick trade. You know what I'm saying? So if I take a look at Visa right now, you know what I'm saying? Like I said, our target was 213. Why was that? It was because of the fact that Visa had a rejection zone sitting around it. But the reason is I still have a contract. I have like 3 contracts left just sitting there. Okay. And the reason I said I might want to sell is because it hit a candle, maybe the 7-minute time frame, maybe the 1 hour, one of those. But the reason I took profit was to play it safe. All right. But the reason I bought was because of Wyckoff accumulation, which is these. All right. So yeah, so you know, as you can see, maybe in the 5-minute, maybe something like that. Yeah. So side, see, secondary test, spring test, same concept, breakup structure, which is yeah. So this structure does not matter. Actually, we're gonna go over that week 2. We're gonna go over the week 2. So yeah, you just says I mean with market structure. For a person who can't bring their phone so often, how do you swing trade? Swing trading means you barely look at your phone. So for someone who trades like me, would be more of a day trader. But I can swing, I can day, it doesn't matter. Because when you get to this area of charting, I don't really think like I said, I don't think I'm that great of a charter. Okay. Like you're all just new individuals. Like I'm just, there's a lot of better people who chart better than me out there, you know what I'm saying? But like my instructors, they're better than me. You know what I'm saying? I own the platform, but I believe I taught like 4 of them, you know what I'm saying? So, and they eventually became better than me. But yeah, but what I'm saying is market structure, in terms of market structure, or for Brandon, in terms of, or for Bob, in terms of market structure, you just want to, you can take profits per every low. For every low that you take out, you can take structure. You can take profit. But the thing is, when you start learning to look at the market in a bigger picture, then you'll be able to anticipate what's really going on. So when you start seeing price like that, that's how you're gonna be able to identify market structure and like where to take your profits. But the thing is, like, I always tell y'all to take your profits way earlier than you should, because me, I don't like hearing nonsense. You know what I'm saying? So I've been studying charts for over a year and a month. I mean, a year and 5 months. But the thing is, the reason I got here so fast, because let me tell you this, it usually takes like 2 to 3 years, or 4 or 5 maybe. But the reason is, so I'm in college right now, okay? And basically, I start skipping class. I started skipping class just to study marketing, all right? So I'm a biology student, which means my classes are hard and all that kind of stuff, you know what I'm saying? So yeah, I stopped going to class. I will always show up on test days. I'm up until like 5 a.m. every day, 4 a.m., just studying. So all that kind of stuff. But right now, it's definitely like secondhand. When I look at the market, it just, I can anticipate price start under 15 seconds, with just a blank eye. Like I can just see what's going on, you know what I'm saying? Like I can zoom out, I know what's gonna happen, all that kind of stuff. But I got here within a year and 5 months. But it comes with a lot of studying. But like I use a monitor, by the way. I use 2 monitors and my laptop. I barely use my phone. I mean, I can use my phone, I just prefer not to. Or I also use on my iPad, like, I have a lot of devices. So basically, like, there's a monitor right there, a monitor right there, and my laptop. So like I said, for Julia, the ones I send out are probably the most basic stuff, because I have a whole platform where I directly teach how to chart. So it's strictly courses and webinars. So basically, if you like, the resources I send are things that you can find online, but the specific private resource that I have, that's just for my members that are in GenesisFX, that we just keep that to ourselves, so, because that's a whole different platform. It's not, you're not paired with Cash Capital or any of that kind of stuff. So, so that's just my whole other secondary platform that I use, which I'm the owner of. So that's where I just teach how to strictly chart, and there's a whole other handful of good charters out there. But yeah, I'm just studying for over a year and 5 months. And like I said, up until even to this day, when I wake up, I just chart. I would just study for no reason. If I don't need to, I'm just always studying. I'm always looking at stuff, looking at other people's charts, just take their method out of this, what I've done, all that kind of stuff, you know what I'm saying? So where's that? It's it's just this is what it is, So this is the website that I'm discussing. I'm not been a big fan of mentioning my platform inside Cash Capital, but this is the website that I'm talking about. So of course, you recommend a friend, you get $100 off me, all this kind of stuff, So basically, it's where we teach how to like chart and all that kind of stuff. We have over 130 members, because it's a lifetime, but then you basically go here and all that kind of stuff. So basically, these are all the packages that have things like, you have a limited one-on-one session, you get signals, all that kind of stuff, but then you get unlimited one-on-one services. Like I said, I think the best part about this is the one-on-ones, the webinars, and the courses. And of course, I think we still give out option trading courses, but the thing is, like, you don't really they're not really that necessary. But if you want stock trading courses or option trading courses, they are also offered in GenesisFX Academy. You know, so of course it's the full package. If you want to just purchase webinars or one-on-one services or all that, they're all there. So yeah, that is within GenesisFX Academy. There's about 9 instructors or total, you know, like meet the team, you know, so this is all of them. But yeah, so yeah, but that is that. So yeah, but yeah, let's see what other question. It says last week I was doing some buying, loan, selling, how the next day is 5 apps. Yeah, for Alistair, basically, yeah, I think it's, well, depending on how you trade, you know, you can use your phone, you can use your desktop, you can use your laptop. Like for a long period of time, I just mainly use my laptop because, like I said, it doesn't matter what you use. If you know what you're doing, you can use anything. Okay, so if you know what you're doing, you can use anything you want to use. So, yeah. So that is that. But overall, that is how we anticipate price action. You know, using support resistance zones. But like I want to tell you, that's just using basics. Okay, if I was to trade like y'all, and I want to trade based off simple price action, that's what I would do. All right, but that's not how I trade at all. Like I told you, I know plenty of methods. Okay, but the reason I was able to anticipate some of this was because I understand more things. All right, so if I didn't understand market structure, I would have said, "Oh, I'm waiting for price to come to the support, and then I'll buy and ride it all the way up to 145." Right. So someone who understood price action going to see that this low was broken. They're going to look to sell up here. So what I did, instead of buying, I started to look for selling location. So that's what happened right there. So I got the selling location. As you can see, we are in tremendous profit. We sold again up there. We sold again right there. Like I said, learn to identify market structure. Then you'll be better than the majority of people that you trade with or in general. So selling location, buying location come from market structure. No, that's incorrect. Identifying bearish or bullish markets come from market structure. I'm sorry, but identifying your entry points come from whatever your method is. So like I said, the better you become at identifying your own strategy, the better your entry becomes. So if you're going to use support resistance, train your eyes, meaning like you got to always look at a chart. Whenever you get the chance, look at a chart. Like me, I spent hours looking at a chart, marking up with a chart. Okay, what I'm saying, like, if you want to get to where my instructors are, where I'm at, or my students, or in GenesisFX, like I tell you, you got to put the time in. You know what I'm saying? So that's why I don't really, when people say, "Can you teach me?" I'm not interested in teaching anybody. You know what I'm saying? I'm really not, because the downside about it is how much time you got to put into it. I highly doubt a lot of people want to put that much time into it. So it's up to y'all. If I see that you are putting that time in, I might reach out to you. You know what I'm saying? But for the most part, I hardly have interest in teaching anyone. Because the thing is, I can teach you everything I know. The question is, are you going to go back and replicate the information? Majority of you won't. You're going to be like, "Oh, I'm trying to learn." I'm not trying to harass y'all. You know, I'm not trying to say, like, what I'm just trying to say is, I've been teaching for over a year now. Like, I see the same replicated crap going on. They want to learn, I teach, you know, then you dip. You know, it's like, it's up to you. What I'm saying is, I don't even have to teach you. If you put the time and energy in, you're going to understand the market one way or another. It's just that my method will just help you identify how to avoid taking particular losses, how to read the market better, all that kind of stuff. Like, if you master your own method, good. You know what I'm saying? But yeah, in terms of teaching people, it's fun. It's just not my, like, the more you teach, it becomes really replicated, you know. So yeah, yeah. But who else got questions? You know, since overall we're basically, what time is it? I got 10 minutes to answer questions basically. But yeah, overall, you know, like I said, it's all up to you. Trading all falls down on you. It doesn't matter who teaches you. Like, the worst person can teach you, But if you put time into it, you're just gonna get better than them. You know what I'm saying? But of course, you gotta understand who you're learning from, which is why, because I can tell y'all who you're supposed to learn from, but majority of people don't have videos on YouTube. Like I told y'all, I didn't learn from YouTube. I learned from courses. I have all the courses. I have all the material, you know, but that comes from my platform, you know what I'm saying? So, but yeah, but this is recorded. You can go back. It's probably gonna be a 2-hour video. So you can just zoom to the, probably like, I don't know when I started this part, maybe like 1 minute, 30 minutes in, that you can just zoom all the way in, and then you can watch it again and again. But week 2, we're gonna go over, let me stop. Let me click resume share. Let me click share screen. Let's see. Share. Yeah, so y'all can see this. I'm pretty sure y'all can see this now. So like I said, we are going to go over this particular trading schedule. Okay, so week 2, how to identify markets going up or down. This basically is using market structure. So week 2 is strictly market structure. Like I said, learning how to avoid all that kind of, you know, whatever it is, then you can do that based off that. So, it's a big monitor, I know. Yeah, it's a big monitor. Mine's just sitting around 30 some. I think this might be like a 27. This one's like a, I'm trying to purchase a 60-inch, but yeah, you know what I'm saying. So it's a pretty big monitor and all that kind of stuff. So yeah, that is that. But let me see what else I got here. Let me check. But yeah, what I'm saying basically is let me put it back on the screen, and then you know, so that way. Let me take a look at this chart real quick. So yeah, do we have any questions regarding the markup? You know, so like I said, this recorded. I'll get it posted later today, because in 7 minutes I do have to go to a group project, and I gotta go golfing later. So yeah. So let me see. But if I am back and I'm not out, then I will probably. I might do another. There's 27 minutes time frame. Yeah, I like that. Okay. Yeah. Okay, but either way, you know what I'm saying. So basically, what I'm basically implying is, you know, so, yeah. With that being said, does any? Oh, my screen's not being shared. Okay. Share. There we go. So yeah, with that being said, what kind of questions do y'all got? None, because we don't got any. Then we're gonna be rolling out at approximately 2 o'clock. I'm gonna be canceling this. I'm sorry, I'm gonna be closing this Discord. I'm sorry, Discord, Zoom call. So yeah, yeah. If you got a question, just let me know. Or if you want to have additional courses, materials, teachings, one-on-ones, then of course you can go to this website called GenesisFX Academy, all that. But yeah, so that is that. Good. If you don't have any other question, you can just go ahead and leave the call. Yeah, that is that. I'll see y'all Monday for sure. No question for now. Yep. All right. Later, guys. For people who have questions, that you just stay behind for the next. Yes, that's what was that link? It was. That's what the link was. That's what that link was. But yeah, yeah. So I have a lot more webinars there. Actually, I know there's only a couple of y'all left, so I don't mind showing y'all. Let's see. Let me see if I can find. Yeah, let me just go ahead and close this though. Let's see. So, where's webinar? Yeah, so okay, let's show you this screen real quick. Okay, where's this webinar? Okay, share screen, Telegram. Yeah, so as you know, there's like, we have a bunch of videos here. This is the webinar section. And then, you know, like you get a bunch of videos. They're like hours, 8 hours, 8 minutes, you know, there's a bunch of them, 10 minutes, like all that kind of stuff. And then of course, you know, all the, and then assuming once the forks and all that kind of stuff, like I said, a bunch of videos. And you know, there's a group chat, of course, where we just discuss like chart and all that kind of stuff. And of course, there's a signal channel where I have to call a bunch of players. And then of course, we have to save messages where I have a bunch of notes and all that kind of stuff. You basically receive every single one of these. Or let's say that you were, let's go to, yeah, let's go to this guy's name. So like you just basically get all of that, including more, of course, and all that kind of like, you know what I'm saying? So you get all of that. But yeah, and there's more which you will get. But yeah, we'll see what that is. But yeah, we are structured inside Telegram, and of course, I will be creating a course very soon. So we'll see how that goes. But in the meantime, yeah. But yeah, if we have no other additional questions, then we can just go ahead and do all that. You know what I'm saying? So we'll see how that goes. You know what I'm saying? We'll see how that goes. But yeah, for the most part, that's what we got, you know, all that kind of stuff. So we'll see how it's going. But other than that, we got 3 minutes left to read in the clock. So I believe that, you know, yeah, sounds good. So, you know, it's like I said, so we'll see how that goes. And then if you want to join the platform, you don't need to, you really don't need to. Like I said, I prefer to teach people who just reach out to me personally. So, like I said, I hate teaching lazy people, you know, so we'll see how that goes. But yeah, I got 2 minutes on the clock, so I guess no one else has questions, which means so when using the rectangles, are you using this to support resistance but also creating zone? Yeah, it says when using. Yeah. What? What's up? What's up?
Okay, can you go back to the chart real quick that you did for I think it was Apple?
You said what?
Can you go back to the chart?
Wait. Why is my speaker really low? Oh, let me see if I can get this really situated because I can't hear you. You have a really soft voice. I'm very, but hold on. It's not letting me. How do I adjust the volume to my thingy?
Come on now.
Give me a second. Internal. Let's try the same system. No, that does not work. Built-in output. No, it doesn't work. Yeah, I don't know. I can't increase the sound here, so it's like it's really low. But you can text me though, since we have that number. But yeah, yeah. But any other questions though? Yeah, I actually cannot hear the thing come out of the system, but I don't know what's going. I don't know what's going on. You know what I'm saying? So we got a minute left to see what's going on. Yeah. Yeah, that works. That's cool. But yeah, I think it's 2 o'clock. I'll see most of you on the chat on Monday. And that will be that. Yeah, so let's see. Let's see. All right, guys, I'm gonna go ahead and end the Zoom call, and then I'll see you on Monday. So yeah. All right, peace out to y'all. How do I end this call? Right click, stop recording. How do I end this call? Let's see, stop recording.
No, you not knowing how to end it.
Let's see. I need to stop the recording. All right, there we go. Stop recording.